Hey guys, Kurt from the Brixwell Group here. Obviously, with this pandemic hanging over everyone's head at the moment, we've got a lot of people asking us if now's a good time to buy investment property or whether the risk's just a little bit too high at the moment. On the back of this question, I thought I'd cover this topic for you guys so that you have a little bit more insight into where things are at the moment and where they're likely to go. So before I get into the various factors that are unique to this pandemic, I just wanted to cover some things a little bit more broadly, okay? So look, no one has a crystal ball. We all have reasonably similar information, and unless you've got a DeLorean that you can take back to the future, you're pretty much in the same boat as well. For my entire career, I've heard people touting the idea that the share or property market was on the verge of collapse, and telling people to pull their money out of the market or encouraging people to get short so that they could profit from the market correction when they eventually occurred. Now, if your view on things never change and there are only three possible outcomes, that prices go up, down, or sideways, then eventually you're going to appear to be right. And you'll say something like, I called this crash 5 years ago and no one saw it coming but me. Okay, so typically people like this either lost all their money trying to sell things short as the market went higher, or out of the market altogether and didn't make any money on the way up and missed the opportunity to make money on the way back down as things just happened too quickly for them. Either way, it's a moot point, and my view would be that in the long term, the price of absolutely everything will continue to increase, be it a loaf of bread, a 4-bedroom house, or your favorite blue chip stock. Next, I'll keep this point short, but if you missed the opportunity to buy during the GFC or the dot-com bubble, or you wanted to buy a property last year when the property market in Australia did come off a bit, just remember how you felt 6 or 12 months after that once things did recover and you missed an opportunity there. I bet that you wish that you did something because now you look at what could have been had you have done something, and obviously you might not feel that great about it. Look, having money in the bank's a great safety net. But if you look at anyone who's done really well for themselves over time, they didn't get there by keeping their money in the bank and earning interest. And if that was their strategy, well, interest rates aren't 17 or 10% or even 5% these days. So if that's your long-term strategy, just remember that over the long term, it's going to be a loser. All right, so more specifically to the coronavirus. Now, while it is a terrible pandemic and it's hurting almost every single person in the world for one reason or another, at this stage, our population in Australia is virtually stable, and we're going to all continue to need somewhere to live, okay? So yes, we might have a temporary pause on migration. However, in the long term, this will most definitely return back to normal with 160,000 people or more migrating to Australia each year once again. This needs to happen to combat the effects of skill shortages and just the aging population within Australia. Look, if politicians want to get the economy back into expansionary territory, which they certainly will want to, then this just needs to happen. All right. Next, I'll just move on to unemployment. While this is certain to rise in the short term as a result of a closure of a number of industries, once again, this isn't going to be something that is a long-term phenomenon. As the number of confirmed COVID cases continue to dwindle, things will start to open up again and people will go back to work. Companies related to industries like international travel or tourism will be the slowest things to bounce back by the looks of things at this stage, so it's likely to be a sticking point for unemployment. However, in the interim, there's a bit of a floor under the income side of things for the time being, thanks to the government programs such as JobKeeper and JobSeeker, which will help people in being able to pay for the basic things like food and housing until their employment returns back to normal. Moving on, I want to talk a little bit about the numbers related to the property market. So seeing that there's a pandemic that is keeping a lot of people at home at the moment, we're seeing the number of properties being listed for sale halve as sellers hold off from going to the market. In a normal market, if the number of properties available for sale halved, then supply and demand would say that property prices would most likely increase as more people competed for less properties. Seeing that there are probably fewer people in the market right now, it probably means that prices will remain stable for the immediate future because one thing's countering the other. So I can't imagine that we're going to see a huge discount and bargains being available and to be had at least for the immediate future. Now, on the housing starts front, it's also likely that that's going to be a little bit softer than what would have otherwise been expected in the event that the coronavirus never showed its face. The effects of this will probably be felt in 12 to 24 months. As once again, there'll be a clamp on the supply of new houses available to the market, which will probably have an effect on both property prices and rental competition. All right, so you'd expect that in that case, in 12 to 24 months' time, you'll see property prices start to rise again as a result of this, and people competing for those rental properties, as there's just a shortage of houses overall. Finally, I just want to touch on the lending environment. Look, post Royal Commission, the banks have really pulled their heads in and are being largely responsible with their lending practices. One thing that we're seeing is a high scrutiny on people working in sectors that have been affected by the pandemic. Of course, this is to be expected. The banks don't really want to be writing loans to people who immediately then don't have the ability to repay. So, it just makes frugal sense to them to be that way. Outside of this, the banks have been pretty accommodating though, with people being able to capitalize interest on their loans if they're unable to pay. Once again, this is another thing helping to keep the market stable as people aren't forced to head to the market and fire sale assets just to meet their repayment obligations. Okay, so all in all, just remember that property is a long-term investment and it's not a day trade, okay? If you've got this mentality and have the view that time in the market is largely not possible, then the best time to buy property is today, and the next best time to buy property is tomorrow. Okay, so it's pretty simple. The best time is always going to be now, regardless of what the situation is when we look at things, because we're investing for 10, 20, 30 years into the future. So, these mild things that might happen over the course of time aren't hugely important to us. All right, so look, if you like this video and got some value out of it, then please give it a thumbs up. If you want to see more content like this, then be sure to subscribe to our channel so that you can see them as they roll through. I've also included some useful links and resources that we make available for free if you head down to the description section and you want to take a little bit of a look at things for yourself. Anyhow, bye for now, and I'll see you in the next video.